Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. I did finish the week with 20 wins and 2 losses for a win rate of 90.91% for the week. So I had a very good week, except the 2 losses I had was on FOMC day, and I'll cover that when I get to it. But other than that, very, very satisfied with the week. Stayed patient. Market wasn't that great to trade, but I did stay patient and kind of wait for the better setups, the best setups I could possibly find. So with that said, let's see, Tuesday, Monday, I had 5 wins and played SPY the entire time. So let's see, Wednesday, the 4th, okay. Okay, so let's see what I said in the Trade Ideas room. If you're not aware what the Trade Ideas room is, I have a channel called Trade Ideas where I post 2 to 3 plays in the morning before the market opens. That way you guys can look at the chart, make your decisions, get the options chart up and ready. I usually been avoiding the first 10-15 minutes because of the fakeouts have been crazy. So I do post the trade ideas regardless anyway. So if you want to take them, then that's up to you, and just be ready to get in and out in case it does fake out. So I try to limit the amount of losses and try to be a little more precise and a little more accurate. And sometimes you just need to be patient in order to get those. So some people just prefer just to have FOMO and just jump in, and then they wonder why they took a loss when things fake out and stuff like that. So you just gotta control your emotions and be patient. That's part of the game. That's 90% of trading is psychological and patience. So you just gotta learn to do that. So in the Trade Ideas channel, I said on the 4th pre-market, SPY calls over 454 and Baba puts under 114. So I did take SPY 453 calls at 950. Right here is where I initially called. I know that high it is like 453.98. I round up for a nice round number so people can have a better understanding of remembering the number versus, just a random number. So I always try to round it up to the 50 cents or the dollar or something like that. But because it dipped on the first candle, the buying was right here or right here. Either or would have been fine, but I would have taken it. Let's see, 950. Yeah, I took it right here. Right here, it looks like. So I took the 453 calls at $1.40, and they went to 220 on that pop. So that was a nice little play. Then I ended up taking calls again, but I took SPX this time at 1105, which is right here on this break right there. Popped up, came back down, popped back up, came back down a little bit. Then, it came back up pretty quickly. So I grabbed for a quick breakout the 45.80 calls at $3, and they went from $3 to $3.80. So a nice little pop there. Then I grabbed them again. See what's been happening with SPY is you have these big green candles, and it comes back a little bit. Then they pop it higher. Then come back down and pop it higher. They just keep, having red candles and keep pushing it higher and higher and higher. So I did grab it again at 1241, which is, this is the 1241. 1241 right here. Right the bounce. Oh, okay. I got it right off the bounce of the 20 EMA, which is this blue line, because when price gets away from the moving average, it will either pull back or chop to bring the moving averages up. So it did come back down. I grabbed it right there for a quick play. Didn't get much out of it. Had the 45.75 calls at 350, and then went to 380 before I went down a little lower. But they did eventually pop. But I did grab them again at 118, which is right here. Looks like right in here. Now I caught this little pop right here and I went down a little lower. I was a little worried that it was going to flush through the VWAP. A VWAP would have been a better area, but you know, sometimes you do get the bounce off the 20 EMA, but this time it was just a tiny one. Then it came back down to VWAP. But yeah, when it came back to VWAP and it bounced a little bit and got over these, blow it up a little more. When I got over this candle right here, this is where I ended up grabbing it because it shows a little bit of a reversal right there. So I grabbed it right here. I grabbed the same ones, the 45.75 calls at 350 this time. And they, wait a minute. Why did I mess that up? I think I messed something up here. No, 350 was this one. Oh, this was 290. Okay, this is where I grabbed it 290. And then went from 290 to 520. Okay, so this one was the $3.50 to 380, and this one was 290 right here, 290 to 520 on that one. Then I took them calls again at 333. It looks like. Let's see, which is right 333. Right in this little pop. Right here. I took it right in this candle. The 45.80 calls I took, and it went against me, I think, right away. I think I have to take a look at the exits to see what time I actually sold it on the 4th. Yeah, 348, which was right in this pop. Yeah. Get back to trade additional. Yeah, I got it here, and it started to pop up and it dropped back down and then ripped back up. So yeah, the 45.30 calls I had at $3.50 this time went from 350 to 480 on that little pop right there. You know, that just SPY was just every time it had a red candle, it went higher and just had those ridiculous moves where it just kept pushing higher and higher and higher, regardless of showing a nice ascending wedge right here. Well, you could say it's ascending channel too, right there, if you want to look at it like that. But yeah, so just one of those days where SPY just keeps being ridiculous, and you just got to trade what it gives you, not what you want it to do. So that particular day, it was just going up for no reason. Now on Tuesday, a lot of small wins on Tuesday. Let's see, I took Facebook off at open. Let's see what. Let me get the day right here, the 5th. Yeah, okay. Pull up the 5th. Now, one of the things I was looking at is it had a huge pop on Monday, and it stayed elevated, and this is what I was looking at. I said in the Trade Ideas channel, Facebook puts under 233, SPY calls under 457. So the 430 to 233 was a pre-market low right here. Waited out the 10 minutes. Look at this 10 minute. This first candle popped up to 257, 237. They came back down. So I did grab it at 944 when it broke right here, popped up, then it slammed back down. So the 230 puts went from 220 to 238. Not much of a play, and it probably would have been a better play if it didn't pop, drop, pop, then drop finally. It just showed a lot of indecisive moves right there. You have to mind me, I'm probably getting a cold because the weather's been kind of very, very up and down, 20 degrees higher. It's been like 20 degrees Celsius here, then be 0 at night. So it's been 20-degree fluctuations, and my body does not like the drastic difference in temperatures that fast, that rapid. But anyway, so I took the 230 puts again at 10:08, which is right 10:08. Oh, okay, I see what I did here. Get this big red candle right here, and I've been trying to grab the retracement. So when I have these big red candles, they come up to 50% of the move, and I grabbed it right here, and then it dropped a little more. So I did buy the retracement at 218 and then went to 296 right here. So they did move more because I bought the retracement and the move happened right afterwards. So instead of all this massive swing right here, literally going from 230, I would say 233, $2 shift in prices right here, up and down, up and down, up and down. But yeah, the move was straight down right there, so that was a better move. And plus it was closer to at the money at the particular time, and IV was going up, so implied volatility. So yeah, they went from 218 to 296 on that play. So then I ended up grabbing SPY puts at 11. What time is that? 11:39. Okay, make sure I get the right day here. The 5th, right? Yeah, 5th. Now I should have done a lot better than what I did. 11:39, which is right here. SPY had this massive red candle right here. Not quite sure what that was about. It could have been something to do with the Fed or something, or I don't quite remember. Then it popped back up, rejected a 20 EMA and VWAP, which is the blue line and the white slash line right there. This is VWAP right here. I have that white slash, so that way I know the difference between the 37 EMA and the VWAP. So that's just how I prefer to have my setup. Now, one thing I always do is well, not always, but I try to trade in the direction of the RCT trend line. So when price is above it, with a nice little disconnect like right here, I start looking for short into it, and when it gets underneath it, I start looking for calls to it, unless there's circumstances or news events that does not favor the ticker at the time. So you have this big red thing right here, red candles, and it popped back up, rejected 20 EMA, like I said. Then it came back down quickly, and I grabbed it right here. I grabbed the 453 puts at 170. And they went from 170 to 217 in that drop right there. Then I grabbed them again. Actually, I sat out until like 323. I should have grabbed this. I should have grabbed this rejection right here. I don't think I was just feeling that well that day, or I just wasn't feeling it at all. I mean, the middays I've been trying to avoid a little bit. I think that might have been why I did so well this week, is that I traded mostly between 10 and noon and 2 to 4. So I mean, I've been noticing that's what I've been doing a lot lately, just sitting out the midday, because midday is either very choppy or not much action, and that's when you end up taking most of your losses. And but it's been a couple of times this past week where that midday is where the moves have been. So this move was midday. This was what, noontime, 1 o'clock right here. So I did grab it at 3. I grabbed calls. I got 451 calls at 323. I should have played this. I should have played that. I should have played this dump right here, but I didn't. I think I can see why I didn't right here, because of the RCT trend line right there, and that does make it difficult to try to short, especially after it's already dropped like $6, almost $6. So yeah, I wouldn't have done. I should have taken this right here, but I definitely wouldn't have taken that, because the our orange line, which is the regression channel trend line, it's a magnet. It just that's why I kind of short into it or play into it, because price always manages to come back down to it, or back to it, I should say. So I did grab it at 323, which is probably right here. Yeah, right here is where I grabbed it. Now, I was looking at, if I remember correctly, I think that there was high open interest for 450. And let's see, where is this? And this right here, is this the day? No, the 6th. What was I looking at? Let me blow this up right here. Oh yeah, I was looking at this right here on the hourly. You can see this pivot right here. Resistance, support right here. So I was like watching this area. Yeah, you can see it, support. And right in this, yeah, right in here. So yeah, I was watching this 451 area because of this on the hourly, and SPY loves to like bounce at these areas. So I grabbed the 451 calls at 215, and they went from 215 to 230. Not much of a play. I mean, if I go down to a 1 minute, I'll even go down to a 3 minute, so that way I don't have to back up too much. Let's see. Is this it right here? The 5th? Yep. This is the right. This is the candle where I grabbed it right here and went up to the RC trend line is different on the 3 minute than it is on the 10 minute, but because on the 10 minute it's up here. But yeah, we had that little bit of bounce, not much of a bounce. Then I ended up grabbing it again at let's see, bring it back to the 10 minute where I can actually see what I'm doing, because I only trade off the 10 minute. 342, which is right here. Right when I went below the 450 is where I grabbed it. I grabbed the 450 calls at 233, and they went from 233 to 262. So I had a feeling that it was gonna was gonna bounce end of the day, because we've had such a huge drawdown, huge well, what was it? Almost an 8-point drop. And usually at the end of the day, when you have a huge $8 drop or something like that, they have a short squeeze, because all the shorts will cover in the last 10 minutes and they won't want to hold overnight. So, wow, my voice is terrible. So I always look for shorts to cover end of day. So, but yeah, I was looking at the 451 because of the hourly. Then the 450 was a big psychological number, and I figured that once it gets below it, algos will jump in and start buying it, and that's what they did. And at the end of the day, at the same time, it was kind of a perfect storm. We could have probably loaded up pretty heavy right here because of the 450 level and end of day, but anything can happen. There's no certainties in trading. There's no guarantees. And that's one of the things that market makers like to do, is when something looks too good to be true, then it probably is too good to be true. Or if it looks like it's one of the things that I don't like is when the market gaps down big or gaps up big. I guess if it gaps down big, everybody usually jumps in and piles into puts ready to open, thinking that we're going to keep going lower, which sometimes we do, but market makers like to squeeze them right out of the gate to make them lose. And that's what the market makers' jobs, if you want to say that, is to do, is to confuse people, trick people, and take their money. So that's one of the things you need to do, is you need to understand the psychological perspective of how market makers manipulate everything, because they do, and anyone that says they don't doesn't have a clue what they're talking about, because when the put to call ratio is too high, that's when they turn it the other way on you. That's why you need to watch that too. So with that out of the way, yeah, that's basically what happened on what day was it? Tuesday the 5th. Then we have FOMC day on Wednesday, and this was kind of not the day I was looking for. I mean, we had a good day. I'm not going to complain. First play I had was 444 calls at 235, and I got them at 1031. I say the trade ideas channel said SPY calls over 448, which was it was a pretty good gap down right here. 452 to, yeah, that's $5 gap down right there. And this is, in this case, it did drop more, but I did wait until 1031, which is right here. You had this drop, green candle came back down, and I grabbed it right here, and it popped back up. Small little play. Went from 235 to 271, so not that great of a play. I mean, a little bit of a mover. Let's see, I got it in the money, way in the money, because 444 is down here and it was at 445. So I went in the money in case it chopped, and plus in the money was pretty cheap, $2.35 for something that's already $1.50 in the money. So that's why it moved pretty good. Then I waited for FOMC. Now FOMC was just a rehash of the previous month's meeting, so but they still move quite a bit on these days, because the market has time to look at things more in depth and digest things and stuff like that. I just noticed on Twitter I put FOMX. I don't know why I did that. Must have fat fingered it. Yeah, the C's right next to the X. I fat fingered it. But let's see. Yeah, I took the Strangle play of 445 puts at 380 and 4510 calls at 370. Now, when I play the Strangle plays, I like to try to get them around the same price. Some FOMC plays you can get them right close to at the money, and I think there's been other FOMC days where I've had to be like $100 spread in both directions, and that's just, I hate that, but they do move. And if you play them right, and FOMC is something that's very, very tricky to play, and a lot of people have trouble playing it. And I've been playing FOMC for a while, a few years, more than that, 4 or 5 years. And I got a good grasp on how they play. Most of the time, the first direction is the wrong one. So if FOMC comes out and it pops, I try to take the first play and cash out, because like I said, 90% of the time it will, the first direction they pop it, then it will end up being a drop. So if it pops, sell into the pop, then hold on to puts for the drop. Or if it drops, sell the puts and wait for the pop. But there are rare occurrences where it just goes in one direction and that's it. But it's rare. I mean, I think it's happened once in the last, I don't know, 6 to 8 months. I mean, it happens at least once or twice a year. Last time it happened was when they I think it was like a few months ago. Everyone was bearish and everything was pointing for a drop, and it just ripped, and it never dropped. It just kept ripping and ripping and ripping. I think that was, I want to say that was January or maybe December. I don't really remember which one it was, but it was fairly recent. But anyways, yeah, it popped. I sold the calls into the pop. The calls went from 380 to 370 to 760. So caught that pop, sold the calls, held on to the puts for the drop, and the 445 puts did go from 380 to 910. So that's how I play the FOMC. They pop, and when they pop, it's literally the first minute. If I go down to the 1 minute, I'll go down to the 1 minute so you can actually see the movement, which is right here. No, back it up a little bit. Right here, blow that up right here. So you can see right here, it's 2 o'clock. Pop right up the first 3 minutes. This is where you sell it. Then you just hang on to it for the drop. Now, the FOMC is not something you go extremely heavy on. Don't play FOMC trying to get rich or going with size. Play with money you can afford to lose, because it doesn't always work out. Even though 90% of the time it does, but that one time that you go in heavy thinking it will work is the time you'll get burned. So don't do it. Just play with caution when you play with the FOMC, and just watch how we play it. I mean, or how I play it, because now usually in FOMC plays, you get the first move, then you get the second move. Then this particular FOMC did not have Powell, so usually you have 2 or 3 moves. The first one, the real reaction, then you'll have another move when he speaks, then you might have another one at the end of the day too. So you could have potentially 2 to 4 or 5 plays just from 2 o'clock to close. But enough rambling about that. I did grab at 237. I grabbed 445 puts at 237, which is right here. Okay, we see had the drop, came back up, retraced. I grabbed them right here. 445 puts at 430. Then it just popped more. That I didn't grab it. It was a loss. Then I grabbed calls at 251, which is right here. Initially, I think I had them right in here, the puts, and it dropped just a tiny bit. I think they even went green, but I was not fast enough to get out. And yeah, I think they went green for literally like 10 seconds. Not even enough time for me to even get in and out. So as soon as when this candle didn't drop and didn't go up right here, it stayed neutral. And then when the next candle came up and broke these other previous candles right here, I had a feeling they were going to pop it. So I grabbed the 4,500 calls at 310, and they went from 310 to $11 in that push right there. Then I ended up grabbing 4,500 calls again at 348, which is right here, thinking they were going to push it end of the day. because they kept it up, you had this drop, pull back up, and they dropped it again to VWAP, and it came back up to retesting this area again. I thought for sure they were going to pop it because at this particular time, the RCT trend line was up here. I thought for sure it was going to pop to the 200 EMA at that particular time, but it didn't, so I took a loss on that play. So I got this one wrong right here, and I got this one wrong. I really thought they were going to push it right here. And but yeah, it was kind of didn't really work out. I really didn't do that well on the end of the day plays on SPY. So I even thought about grabbing puts right here, but you just never know. But yeah, it stayed pretty well flat the entire day. But this is easy playable if you play it right. And I didn't play that one right. And this one, I know exactly why I took this one. And I mean, yeah, I know exactly why I took both of them. I had a good plan for both of them, and just the plan didn't work out. So my only 2 losses for the week were this particular day. So I'm not going to lose any sleep over it. But I was a little annoyed going into the end of the day, though. So let's see, on Thursday, let's see, I played Microsoft. Now what I say in the Trade Ideas room on the 7th, let me get this up. Okay, I said, let's see, Facebook calls over 225, SPY puts in a 444.50, Microsoft calls over 299. Microsoft does not like to be under 300 at all. When it does, it likes to rip. So I came back down, dropped a little bit on open, it popped back up at 299, which is right in here, right in this little high right here. Once it broke that, I jumped in it right at open because I had a feeling it was going to rip. And I grabbed the 300 calls at 220, and they went from 220 to 415. So that was a nice smooth play. Then I played SPY. Let's see. I played SPY puts at 1009, which is right here. As you can see, I said what? SPY puts at a 444.50, which is down here. Popped up, and it pop, drop, and right when it got underneath this, you see these candles right here? You can see this bunch of candles, this consolidation right here. Right when it broke underneath it, got 1009, I got it in this candle right here. Right when it came underneath these candles right here, this is where I ended up grabbing the 445 puts. They went from 190 to 267. So that was a nice little play. Kept rejecting the 200 EMA, which is the purple line. So that was a nice little play. Then I ended up playing Tesla. Tesla is the one, every time I call it, it ends up going into the money most of the time. It didn't this time. Okay, let's see. I called it at 1106, which is right here. Popped up. Came back down a lower day. I didn't grab it right there. I thought about it, but stocks have been doing like a double bottom plus. You can see right here, this is a nice little pivot. This is support right here. Resistance here, resistance. Kind of acting out as resistance right here, even though it popped through and came back down. Then support right here, then it's support right here. So when it came back down, I figured it might bounce a little bit, so it did bounce up to the 20 EMA, rejected it. Then when it came back down, this time this is when I ended up grabbing it. I grabbed the Tesla 110 puts at 390, and then went from 390 to 1104 if he held all the way through. So that was a nice little play. Then I ended up playing SPY calls. No, puts, SPY puts at 342, which is right here. Now, this SPY likes to do this. It likes to reject higher day. Well, not high. I mean, this is the higher day right here. Rejected it, came back down, and came back and retested it. And when he rejected the higher day, had a false breakout. That's why I ended up grabbing it right down in here. So I grabbed the 449 puts at 145, and then went from 145 to 203. You gotta watch those end of the day candles. Those end of the day candles. You get it right, you time it right, you can make some good money on that. So you just gotta wait for it. And they usually end up happening literally the last few weeks. It's been the last 10-minute play. It's trying to figure out which direction it is. And right here when it popped up, I didn't like it on the call side because it's gone from 443 to 450, and 450 is a big psychological number. When it breaks the 450, rejects it, comes back up and rejects it again harshly. So that's why I ended up grabbing it. I mean, that's also like almost a $7 move. They're gonna let some air out usually. So plus 450 was the big psychological number, and when it rejected that, that's what why I was looking at puts, was that rejection. So you got to pay attention to the actual numbers too, because these big psychological numbers have a huge impact on the plays. So yeah. Then I ended up having, let's see, on Friday, trying to get the Friday up. Friday I had Tesla right at the open. Let's see what I said. Friday I said in pre-market trade ideas rumors is Tesla puts under 1045 and Apple calls them on 173. So I did grab Tesla 120 puts, no, 1020 puts at $4 at 932, right at the open, right when it came down. And they went from $4 to $7.55, so that was a nice little play. Then I ended up playing Facebook calls at 1020, which is right here. You see it dropped down. Somebody in the room, I can't remember who it was. I think it was, I can't remember, Barack or something. Mentioned that Facebook looked good. I wasn't even looking at it at the time. And when I did, it was like right here. It was coming back up. So when it come back up the previous day's close, which is this white solid line right here, it tested it, came back. This is where I ended up grabbing it. Then it ended up popping. So I had the Facebook 220, 250 calls at $1.70, and it went from $1.70 to $2.92. So that was a nice play. Wasn't even really looking at it at that time, but it did end up being a nice play. I think this one made the call out in the room. So then I ended up playing SPY, the last two plays of the day. I took 35 calls at $3 at 1132, which is rate 1132. Oh yeah, I bought the dip right down here. Yeah, I bought the dip right here. Yeah, I got the 35 calls at $3, and they went to $4.30. So $1.30 move, not much. If you trade SPX with the plan of taking 50 cents to $1, you'll win. You'll end up profiting at least 90% of the time. But if you try to get greedy and try to hold for those home runs, you're not going to get them. You'll end up losing more than winning. Holding for those big runs, you just take the small plays when you can. So then I ended up grabbing the last play of the day was at 313, which is right here, this candle. I grabbed the 4505 calls, 4505 calls at 313, which is this candle right here. I can blow it up more. Let's see, 313, which is right in this pullback right here. 313. No, actually, I grabbed it right here. Grabbed it right there. I gotta go back to 10 minutes and figure out why I grabbed it right there. Let me just blow this up more right here. 313. Oh yeah, when it came back up to the, pulled back and it came back up. This is where I ended up grabbing it, right there. And yeah, they went from 370 to 780 because they were right at the money at that particular time. So yeah, what was happening? It was going on both sides of the PDC, as you can see right here. It went under it, then it popped back over it, then it went under it, over it. It kept teetering on both sides of it. So when it went under and it came back up, this is where I ended up grabbing it right here and sold into that pop. So yeah, they went from 370 to 780, so that was a 100% move on that. So So those are the trades this past week. I didn't really trade that much. I mean, 20 trades, 22 trades is a lot, but usually I've been doing anywhere from 25 to 30 apparently, but I'm trying to dial it back to be a little more precise and stuff like that. So yeah, that's going to do it for the recap. I hope this has helped understand why I took what I did and why. And hope to see you in the room, and thank you for watching.